Good evening, ladies and gentlemen, and welcome to what we are calling the Emergency Web Summit, the Emergency Equity Master Web Summit. As you all are aware, the world has just maybe averted a crisis, the US debt crisis, where the US was actually going to run out of money to pay all their debts and their salaries, but they've reached an interim deal, the US government, and things seems to have passed. But the crisis is far from over, and that's what we think. And like I wrote to you in my message, we actually think the crisis is going to be worse than what most people expect it to be. And it could actually have a significant impact on your portfolio. Now, there are going to be a lot of developments, there are going to be a lot of moving parts, and therefore I think it's extremely important for us to understand what we need to keep in mind when we are taking our new investment decisions or even looking at our existing portfolio. And just to take care of these issues and address these queries, I thought we'll invite Asad Dosani, who's the author of the Lucrative Derivative Report, to spend a few minutes and maybe explain to us what's happening around the world and how we can benefit from it, and also how we can prevent it from impacting our portfolio adversely. So without much delay, over to Asad. Asad, welcome to the Equity Master Web Summit.
Thank you, Rahul. So, the US debt crisis and how it impacts you. So, as most of you will be aware, over the weekend, the US government averted a catastrophic default on its debts as they passed last-minute legislation to increase the debt ceiling and cut government spending. So for now, a crisis has been averted, and the financial Armageddon many were talking about has been getting worse. The recovery clearly seems to have stalled. So what will be the result of all of this? For one, the US will be increasing its debt, of course, as the debt ceiling has been increased. Second, growth will slow down due to the current slowdown we've just talked about, as well as future spending cuts. As we have said, the fiscal position is not sustainable, so government spending will fall, taxes will increase. The outcome of this is that we'll see a slowdown, possibly a double-dip recession in the US economy. And what happens when the US economy falters? Well, one of the main things we have noticed in the last couple of years is that the Federal Reserve tends to keep incredibly loose monetary policy to aid the US economy. So, given the likelihood of what we feel will occur, we believe that they will keep interest rates low for a very long time and quite possibly start a new round of quantitative easing, QE3. So, given that the US is likely to engage in further quantitative easing, we think there will be good opportunities to make money. The last time we had quantitative easing, commodities, especially gold, rose, the dollar fell, and stocks also rose. Given what we have seen before, we can expect more of the same to occur this time around, and we can make trades to take advantage of this. But of course, crucial to all of this is timing. And this is because news occurs, announcements happen, and often the increases in gold, for example, won't just occur in a steady way all the way. So what we need to do is have good analysis, and then we can take advantage of the likely macro trends that we see going forward. That's all for the presentation. I'll hand over to Rahul for any questions.
Thanks, Asad, for this quick roundup of what's happening around the world. So basically what you're saying is that the crisis is deferred and you're going to have like a QE3 again. That means there's a lot of money going to be pushed into the system again, and that's again going to drive up asset prices. Let's look at it this way. If you can discuss gold maybe to begin with. Gold's already at an all-time high, and there's going to be more money in the system. Would you actually expect gold to go up further, and what would you advise long-term, short-term investors to do?
I think when it comes to gold, yes, it is at an all-time high, but the fact is that it has been going up considerably, and even people who bought at all-time highs in the last few months would have made money. Mm-hmm. So, and this is as a result of the QE that we had last year. So, if another QE does occur, I think we can be fairly certain that gold will continue to rise. So, from a long-term perspective, commodities are generally good to hold. I think it would be wise to not hold only gold, but diversify across commodities because they all tend to increase together. And for shorter-term investors, there will be many ups and downs. We'll likely see, for example, that the current deferral will probably be bad for precious metals because risk aversion will fall. So, for short-term investors, there will be considerable opportunities to time the market and make good profits.
Yeah, and that's what happened once the deal was reached on Monday morning India time. Gold fell considerably, and so good news is bad for gold. That's what you mean, right?
That's exactly right. Gold has a relationship with risk, very strong relationship with risk aversion. Okay. When risk aversion goes up, gold goes up, and vice versa.
Okay. A little bit more on the foreign exchange scenario. How do you see? I know you're saying the last time there was a QE, the dollar actually fell, and you're saying the same thing could happen now if there is another round of money being pushed into the system. I
think that's definitely the case. When there are more dollars being printed, as you would expect, the value of each of those dollars falls. So, and especially against the rupee, given the way the RBI has been raising interest rates, that's a real push for rupee appreciation. So we could see USD INR fall.
So vis-a-vis the rupee, for sure, not for sure. Vis-a-vis the rupee, you expect the dollar to depreciate. You expect the rupee to become stronger.
I expect that would occur. Of course, this is depends on what happens with the Indian economy as well. If we see any slowdown, for example, in the Indian economy, then that could have a negative effect on the rupee. Okay. But given the current trends, we would probably see the dollar fall relative to the rupee.
And do you think in a time like this, there are, from your perspective, from a derivative perspective, do you see opportunities to profit from? Or do you think it's too volatile a time and people should stay out?
I think it really depends on an individual investor. In my opinion, every crisis is really an opportunity. If you're a smart investor and a smart trader, you can make money from anything. So, for example, with this US debt crisis, given the likelihood, there was a small possibility that volatility would be very high. So possibly it would have been wise to stay out of the market, for example, say just for this week. But most of the time, there is plenty of volatility in the market, and there are plenty of opportunities to make money as well.
Okay. So, is there any other message you'd like to give to the viewers, the listeners today?
I think what I would say is that when we see events like these occur, it can be very unpredictable. But often the more we study it and the more we look deeper into it, we can see that the responses of various assets is actually quite predictable and and makes a lot of intuitive sense. And for that reason, I feel that there's plenty of money to be made by investing using derivatives and doing macro analysis to work out where things are going to go. And that's all. So.
Yep. Thanks for that, Asad. It was very helpful, and I'm sure the listeners who have tuned in are actually going to benefit from it. Just a little bit of housekeeping. We need to put up the disclaimer. Request everyone to read that. We'll be also emailing it out so you can read it in detail later. And just to conclude, I had actually a talk with Asad, and we were trying to see whether there are investment opportunities in the derivative space. And like he said, that if there's volatility and if it's, and he can find opportunities like that. And he's actually starting to find opportunities which could make money for subscribers of his service. So I have coaxed him into doing something that we don't do always. We do not very often. And what we are offering as a one-off only to you, the people who are attending this webinar, is we are offering a 50% discount on Asad's lucrative derivative report, which is a weekly recommendation service for derivatives. Just to give you a very brief gist, he covers commodities and currencies. And one thing you should know, he is not, I repeat, not offering you intraday tips. These are solid recommendations. These have a fundamental basis to it. And Asad, correct me if I'm wrong, these are like from 1 to 3 months, can be even longer views on the contracts that you recommend for purchase or sale.
Yes, that's right. So we would offer short-term contracts, which might be a week or up to a month, and we would offer medium to longer-term contracts, which could be up to a few months.
Up to a few months. So if you want to give it a try, this is probably a good opportunity to benefit from this 50% off that Asad's allowed us to offer. So with that, I'll sign off, and below the presentation there is a small link over there which you can click on and actually avail of this service. And in case you have any inquiries about this, you can always call us and talk to us. We'll be delighted to assist you. With this, many thanks for attending the webinar, and we look forward to your participation in the next webinar as well. Many thanks.